Good afternoon, everyone. This is Brad Matheny. It is 11 o'clock, roughly out here in California. I just got back from taking my father around. He's a disabled vet, spinal cord injury from many years in the service, but he's doing pretty good, other than being on four wheels. So now here we are moving into the last 2 hours of the day. We've had a lot of downward activity here. This is a 30-minute SPY chart, and you can see we've had a lot of downward activity, almost followed my earlier blue trend lines to the T. We are right now in that 557 range. Let's call it 557.20 to 557.60. This is where I think we're going to try to find some support. Okay. You know, and you've heard me talk about this, that support is not a hard line. So, and resistance is not a hard line. So here we have our channel moving across here, and it's not hard like concrete. Okay. Support is soft, it's fuzzy, it's like a boundary that exists but doesn't exist. Price can go through it and then back the other direction through it, or waffle around like we keep seeing this rejection. And you'll hear me talk about rejection, which is really, this type of rejection here or this type of rejection here. That's what I'm looking for in terms of rejection. Price goes above, fails, loses momentum, contracts, and goes down. Price goes above, closed out here. And you remember this was yesterday. I called that this was at least to members, a perfect trap, knowing that my SPY cycle patterns were predicting a big breakdown day. And this rally into the close was almost a perfect trap, sucking out the shorts, blocking in the longs that had no idea. We're up here looking at pushing at, potentially new all-time highs. Let's take a look. Yep, new highs on the S&P. And what did that do for us? All those shorts, all those longs this morning, the guys that got trapped up here had no clue that the markets were going to break downward, but we did, because we had this wonderful little thing called the Mint.com SPY cycle patterns that indicated we were in a trending possible breakdown pattern today. And sure enough, that's exactly what happened. So, where are we at right now? Let me open this up a little and really try to show you. Where we're at right now, ladies and gentlemen, is that we are struggling. And I'm going to just come in here. I'll get to a 10-minute. We are struggling off of this kind of a double bottoming. It's almost like an inverted head and shoulders pattern right now. We are struggling to see if we can find any support in this area. Okay, it's really, more along lines like this, but this 557 to 557.40 area could continue to struggle to be support. Now, remember, if we, and I will get rid of some of these lines, I know I have a ton of lines out here. If we fail, which it looks like we're testing it again, then we have this lower level at roughly 556, maybe a little lower, but I am still expecting, I want you to understand, and again, I'll try to get rid of some of these lines that I'm drawing. I am still expecting, let me get rid of this one, a bit of a recovery move this afternoon, possibly moving back up into this area. Okay, so yes, I am looking at this as the markets are trying to hammer out a bottom. They are looking to find support right now. We've had a fairly strong move to the downside. The Dow Jones is up 185. The NASDAQ is down 551, 2.75%. The S&P is down 1.35, and Bitcoin is down 690 at 64,390. So what I want you to understand is this is a pretty big move. Let's go take a look at it on a daily basis to see just how big it is. And now remember, I had indicated that this was going to be a potential breakdown bar. I highlighted that we could break down into this area and come down, but look at this huge breakdown. Absolutely perfect. And look at how we're trying to find support near these lows above this intermediate support level, which is the 382 to 50 level. It's actually, again, if I were to come in here and move this to the highest point, highest close, this support level is really up here. And if we were to then take a look at this level, move it to the highest close, which should be right there, that means that this intermediate support level is right here, 382 to 50. So that gives us a pretty good objective right here as to where price may try to come and open tomorrow. So let's go back down here to the 10-minute. And these 382 to 50 levels, you hear me talk a lot about Fibonacci. You're going to hear me reinforce it over and over again. Okay, but if I can grab something that's not trapped in here. So here is our Fibonacci level. Okay, I'm going to scroll this on out. There we go. That's our short term, right now, resistance, but technically support level based on Fibonacci. We're below that level, which is why this lower level plays into a very important role to potentially be support. See how we're getting this nice rollover pattern here. We really got to watch this now for an upward trend. I would tell you it's 11:10. I've been doing this video for 7 minutes. This looks very solid as a base, particularly this little higher low right here. If we build momentum, we could be looking like we're going to the upside. In fact, let me check here. Upward RSI, upward stochastic, almost upward longer term stochastic, and now we're getting upward. Oh, just fell off. There it is. So we're getting upward moving, slightly upward moving GAN vibrations. Now this is 10 minutes, so we really need to see this confirm to the upside. You would be watching this lower level, 556.11 roughly, 556.15 as a potential breakdown failure level. But right now, this is building very solidly. Okay, so now we come back over here. And what I was trying to show you earlier was that, oh, come on, drag. There we go. The attempt to rally back up is going to likely put, if I'm correct with my pattern, the fact that this inverted counter trend major crush pattern. So a major crush pattern is the way I can explain it to you is this. A major crush pattern typically happens in an uptrend, and then a major crush pattern would be something kind of like we saw today, maybe a very deep bar, big range, fairly strong momentum, and it's called a crush pattern because that's what I labeled it, and it typically points to the downside. Now, a counter trend crush is going to be essentially a move to the upside. If the counter trend is accurate, it'll be a big crush pattern, but to the upside. Now, understand that the way that plays out for us right now is this. Very simple when you start to really take consideration of where we're at. So, where are we at? Remember, I told you about trending. Remember, I told you how I look at trending to try to determine what's going on with the cycle patterns. I look at the last 3 to 5 days. Okay, so I come back here. I take a look at the average price 3 to 5 days ago, back in this area, and where are we at right now? We're below that level. So we're in a downward trend. Generally, we're in an upward trend, but we're in a pretty solid pullback, retesting this area. The crush pattern tomorrow very likely will end up being, sorry, wrong thing, some kind of an open in this area, moving very strongly up into this area. Okay, it's gonna probably be a pretty strong reversion, potentially very strongly above this middle support area here, 561, 561.10. In fact, I'm going to tell you that I think we are going to see, and go back to the 10-minute, I think we are going to see, and there's my line that I just drew, so I'll get rid of it. I think we're going to see, there's our market move up, lovely. The SPY move back up into this, let's call it 558.50 or higher. So kind of right in this area by the close of the day. I think that's a pretty common area for us to try to move up to because, again, ladies and gentlemen, what is it? It is this lower channel line, the lower dotted yellow channel line. So, why am I picking that level? Well, it becomes a critical soft support resistance level. So, it makes sense to me that price, if it's going to rally, is going to rally up into this area, which becomes our support level, just like this was our resistance level up here. And at that point, then, depending on what happens overnight, we could see some sort of an open, maybe in this area, maybe up in this area, and we could continue to see a reversion tomorrow up into the 563, 564 area. So we're getting this big washout. And why is this going to be important going up? Well, because again, technically, we have this big, beautiful gap window from basically here to here that needs to get filled. Now, it may fill it completely all the way out here, and I will make this bright, bright blue and make this blue. So, but again, seeing price come back tomorrow on a strong reversion and potentially filling that big gap tomorrow morning or tomorrow midday before moving downward. And what would happen likely is this: if we fill this gap fairly early, touch it, come back down, set up some sort of resistance, we would likely come down into something more like this into the close tomorrow. So be aware, this could be just a big rejection, and that's what this is here. A big move up here fails, comes down to rejection, and then comes back down to retest support, which is again going to be here or down in this lower level. Okay, so understand I'm giving you a very clear picture of what price is doing. Now, why is it doing this? Think about it. Why is it doing this? Price is struggling for direction. Fibonacci price theory teaches us that price must always, okay, doesn't matter what it's doing, it must always attempt new highs or new lows. If it cannot attempt or reach a new high, then it must then turn around and try to hit a new low. If it cannot reach a new low, it must then turn around and try to reach a new high. So at this point, take a look at this on a 30-minute basis and let's ask ourselves some very simple questions. Did it reach a new low? Well, there's this low over here, which is a unique low. There's this low, which is a standout low. There's this low, which is a standout low. This is on a 30-minute basis. So, yes, it reached lows getting down here because it broke below this and this, but it failed to reach a new low here. So at this point, failure to come take out this unique low, which is why I highlighted this area, because understand in Fibonacci price theory, which you can learn in my videos, my training videos, is one of the critical support areas. So I'm going to come in here. I love that little box. Where was that? Come here. There it is. This is so important to learn. These Fibonacci price theory levels are just where is it? I missed it. Come back. There it is. So, establishing new lows like this, learning Fibonacci price theory, learning the difference between a standout low and a unique low is very, very critical. Okay, these are standout lows because this is not a unique, this is not a, call it a unique price low going back 15 to 20 bars. If the low has already been lower in the last 15 to 20 bars, it's called a standout low. If it has a unique low that has not been touched in the last 15 to 20 bars, it becomes a unique low. Same thing all the way up off these highs. This is a unique high. This is a standout high. This is a unique high. This is a unique high. This is a standout high. This is a standout high. This is a standout high here. And this is a unique high here. Unique highs are highs that have not been touched in the last 15 to 20 bars. So down here, we're looking at a unique low. This is a low that has not been touched in the last 15 to 20 bars. It's going to become future support, major support for us. Right now, major support is the last unique low way back over here. This is a standout low. 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 And what we're looking at is price finding support. It failed to take out the last unique low. If it fails to establish a new lower low, what must it do? Fibonacci price theory teaches us that it must turn around and try to take out the last unique high. Where's the last unique high? Here, I'll draw it for you. The last unique high is right up here. So see, Fibonacci price theory teaches us that price only acts for the single purpose of trying to establish new highs or new lows. That's it. That's all it does. And then when you understand that in the process of doing that, price only does two things. It either trends or it flags. That's all it does. There is no other direction or pattern that price will take. It's either going to trend or it's going to flag, and then it'll reverse or extend higher, and that's what it's designed to do. So at this point, we're looking at a very solid reversal. I'm going to end this video pretty quickly. Look at how this market is trying to build a little base. Let's come over and take a look now at the lower indicators, and you can see we are now up in RSI, we're up in stochastics, and we're up in the GAN vibration chart. We're looking at a move potentially back up into the 559.20 to maybe 560 area, and then we're going to likely try to fill that gap up here to 564.50, 565, maybe a little higher, and then we may roll into rejection back down over here into 559. And that's a pretty good explanation of what's going to happen over the next potentially 24 to 36 hours. Okay, I will end it here. Thank you very much, guys. Talk to you soon.